The stock of electric vehicle company NIO has had something of a roller coaster ride this year. We saw all-time highs up near $67 a share in early Jan, and it has traded almost as low as 30. So what next? Given the bounce back, are we going to see these all-time highs threatened, or actually are we more likely to go back to $30 in the medium term? I thought it'd be interesting to take a look at NIO, given some of the recent news we've had about deliveries, record deliveries in June of this year for their electric vehicles, and the sort of moves that we've seen in the stock price. Clearly over the years, if we look at something like Tesla as well, there's been an awful lot of investor interest in electric vehicle stocks. Just a year ago, the stock price was only around $11, $12 a share, and then pushed as high as almost 67 in January. So as usual in this video, I'll talk a bit about the recent news, the earnings, some of the levels to watch, then we'll come back onto the chart, look at things in more detail and see what the technicals say. Hello, I'm David Jones from Capital.com, and I thought we'd do an update on our stocks channel this time around at the electric vehicle company NIO. We've seen a good run for the shares since the lows in May, so I thought let's talk about some of the recent news, the levels to watch, then we'll jump back onto the charts and take a look at things in a bit more detail. As usual, if you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel. And it means we can continue to push out lots of different content during the week on various different stocks. Okay, let's get into it and take a look at NIO in a bit more detail. So just in case it's a new company to you, they're a Chinese multinational electrical vehicle manufacturing company that was set up and started in 2014. They came to the market in September 2018, and by January of this year, they started off trading at $6 a share, and into January, we saw the shares up more than tenfold from that initial IPO price, trading at $66 per share. They've come off since then, but clearly a fantastic performance as we saw lots of strength and lots of interest across the electric vehicle sector. They've taken a slightly different approach. They've built, rather than driving in and charging up your car, they've actually built a network of battery swapping stations across China. So you drive in and a machine takes your battery out and puts in a fully charged one. The latest earnings for the company came out at the end of April. And back then, I mean, it's a company that's losing money like a lot of these electric car companies have done historically. Its loss was worse than was expected. So it lost 48 cents per share in its latest quarterly earnings, which I think contributed to the pressure we saw on the share price into May. But we've had much better news since then. So in the latest delivery update in June, the company said it delivered just over 8,000 new electric vehicles. And that 8,000 number is up by more than 100% compared to the same month, June, in 2020. So this is something I think that has definitely made investors feel a bit happier over recent days. Of course, there's a global chip shortage around the world. The car sector isn't immune from this because so much technology, of course, goes into everything these days. And the company had said that it would this would affect its deliveries in the second quarter. So it did make that news about record deliveries in June, something of a positive surprise for markets. Since hitting the low in May of this year, we've seen quite an incredible recovery. At the time of recording, the stock is up around about 60% off those May lows, so in less than a couple of months. What does this mean? Is there more to come? Let's take a look at some of the levels to watch, then we'll jump on the chart. So I think that the next immediate hurdle, it's a recent high that we've seen coming in at just above $55. I think after that, if we did see a breakthrough 55 and this recovery continue to extend, we can start looking back to a run, perhaps back to those all-time highs around $67 from earlier this year. On the downside, lots of support left on the way up. The most immediate band of support for me is from around $40 to $43.75. But as usual, to put some color on these numbers, let's jump on the chart and take a look at the technical view for NIO. Let's start things off with this relatively longer term trend on NIO from May of 2020. It did a good job on the way up, as you can see, quite a few touches on this trend line. And perhaps what would have spooked some technical analysts, the moves we saw in March of this year as that trend line got threatened. But as I often say, just because a trend line breaks doesn't necessarily mean that trend is going to do an abrupt turn and go, in this case, plummeting lower. It can sometimes just mean the stock is going to carry on that trend, but at something of a lower pace. We'll come back to the trend in a second, but let's have a look at the moving average first of all. So here's a 20-day moving average on the price of NIO. Moving average is very good in trending markets. A buy signal when the price moves above the moving average, like here in September 2020. And a sell signal when the price moves below, like here in February 2021. So if we jump to the more recent signal, the last signal we had off the moving average would have been the end of May, 25th of May, when the price moved through sort of $35, $36, that sort of area. That was a buy signal. And since then, the moving average has stuck with that trend. We did see the price sell off a bit late June. The moving average acted as almost like a floating support, and the moving average at the moment is sitting around $46, $47. So we'd need a break below there to suggest that perhaps this swing of the trend is over, according to the moving average. But bullish so far based on the moving average. Let's take a look at the RSI. So I've got a 10-day RSI down here. As is often the case in strongly trending markets, which we have had for a few weeks now in NIO, the RSI, an overbought, oversold indicator, will move to an extreme too quickly. So we had the RSI going overbought in early June as the price moved higher. Price didn't really care and carried on going up. But the RSI has stayed overbought pretty much since then. So I would question the use of RSIs in strong trending markets. I think the opportunity here for the relative strength index will be if we get a deeper sell-off from where NIO is trading now and the RSI unwinds a bit and goes oversold, a bit like we had here in mid-May, suggesting that perhaps the correction has gone too far enough. That would maybe be the interesting signal for the RSI, but we don't have it yet. So we'll keep an eye on it and see what happens. But what I want to focus on is probably what's been going on this year for 2021. So it did fall out of that longer term trend. And the question now is, are we going to see a new trend continue from here? Clearly, we've had a great run since the May lows when it was at nearly $30 a share, almost doubled up to 54.80 at the beginning of July. We've had a bit of weakness over recent days, but is this just a buying opportunity? So for me, from a longer term perspective, if we did sell off back near those May lows, I think for most technical analysts, that would look like a buying opportunity. I think it's only if it breaks below 30 do we have to really worry that a new downtrend is starting. So when it comes to looking at, I think, bigger long-term levels, for me, $30 clearly an important one to watch. In the short to medium term, if we were going to expect this trend to continue, and the obvious target is a run back up to this all-time high from Jan and the February highs as well. So the whole $65 to $67, I think, would be like a swing target for someone who is expecting this trend to continue. But let's take a look at this trend from May in a bit more detail. Let's take a look on the hourly charts. So this is what our trend looks like at the moment, picking it up off the 13th of May lows. I think that trend line is a fair representation of the trend that's going on. We can see it accelerated away at the end of June. We've come back near the trend line, so I think from a shorter term point of view, a technical analyst who was following this trend would be expecting the strength to come in, well, pretty much around about now. We've pulled back to the trend line, and for the last, 6-7 weeks, the trend line's done a good job of stopping any sell-offs. I think we've got interesting short-term support at $48. It was the highs back here in June, so a bit of a barrier on the way up, and then perhaps we see it flip to act as support now when we have seen a couple of slides near 48 late June and into July, where we have seen the buyers come back out. So I think 48 is the first level to watch. But for me, I'd only consider this shorter term trend over if the price slipped much below $42, so the lows from the second week of June. So I think 42 to 48 is an interesting zone for NIO. That trend off the May lows is still up. We've had a bit of excitement over the last few days, come back down to the trend line. It could be a really interesting stock to watch over the next week, I think, to see if this trend continues. That's it for the update on NIO. We'll come back to it over the course of the next few weeks, next few months, see how it's performing, see if it can move out to fresh all-time highs. But for now, from me, David Jones and Capital.com, we'll leave things there. Good luck with your investing. For more trading videos just like this, please subscribe to our channel.